affected the cryptocurrency market and its effect on stable coins and Bitcoin. Stable coins like Luna, Terra, Celsius, and companies, and how the companies and individuals are selling their Bitcoin to pay the bills. Because their stable coin went away. So the International Money Fund, and this was an article that I had found when I started doing my research, the International Monetary Fund believed that cryptocurrencies did not yet pose a risk to the global financial system in the beginning, and that was about a year ago. However, it's now concerned about the growing market caps of stable coins and how they're backed. This was their concern about a year ago and constitutes a warning. Meanwhile, U.S. fintech giant Stripe is hiring a new blockchain team to enable crypto payments for its users in this environment. So, reports suggesting an increasing likelihood of Three Arrows Capital is facing an insolvency weighed on the broader cryptocurrency market on Friday, reversing most of the gains made in the wake of the Federal Reserve's guidance on rates. And so over the past 24 hours, Bitcoin was down to US 20,958, and Ethereum fell 1.5% to 1,096, according to CoinGecko. And on the bright side, Bitcoin was approved for an ETF. So here in the United States, you'll be able to use Bitcoin in an ETF format. Now, the carnage that began last Friday after the 12-month inflation came in at a 40-year high and has led to the prices of the world's top two cryptocurrencies falling by nearly 30% and more than 38% respectively over the past 7 days. And the global crypto market capitalization was down 1.4% to US 941 billion, still below the US 1 trillion mark that it had been above since January of 2021. So over in the stablecoin stage, Tether's USDT market capitalization was down to US 69.4 billion at levels last seen in October last year. And US-based crypto lender BlockFi was among Three Arrow Capital's lenders that liquidated at least some of the crypto hedge funds positions, the Financial Times reported on Friday. Three Arrows is among the world's most influential crypto hedge funds. The fund had borrowed Bitcoin from BlockFi, but was unable to meet a margin call, the newspaper said, citing people familiar with that matter. One of the people told the Financial Times that the liquidation had occurred by mutual consent. And so BlockFi founder and chief executive Zach Prince said that the company has foreclosed on a large client that failed to meet its obligations. So that's the story right now, or was on Friday. So we're going to follow along with that. Now that we have the crypto contagion fears information out in the open, let's talk with Noah about that, because he's the current expert here. So, Noah, when they say crypto contagion, what do they mean by that?
Probably just as it sounds, they one crypto acts as patient zero, so to speak, and then it infects all the other cryptos that rely on it. So, like patient zero infects Ether, and Ether infects Shiba infects somebody else, and then they all start to fall like that. But I think that's kind of a it's a good analogy, but it's also a poor analogy at the same time, because a lot of the stable coins rely on Bitcoin as a marker for its value. So as Bitcoin falls, so does everything else. So I mean, I don't know if that's a contagion, so to speak. It's more like when you have stable coin that is reliant on the USD for its value, and then the USD falls and that stable coin falls. The USD didn't infect the stable coin with a contagion, did it? No, it's just what it's based off of. It's the benchmark for how stable it is. So Bitcoin tanked, and everything else did too. So
It kind of reminds me of the the domino effect during the Vietnam War. You probably don't remember that, but they used to validate the war by saying, if we let Vietnam fall, then along goes Cambodia and all the countries around it, and pretty soon it'll be the United States. Will be falling. So that's what they kind of did, and it was turns out that wasn't really true, but it seems like that's kind of familiar or similar, I guess is the word. And I don't know how much that really means, but that's what happened in the past. Now, one thing that we've got is a lot of people are complaining about staked ether, and they're calling it the token at the center of crypto's liquidity crisis. Now, I'm not sure how true that is, but the information I've got here is that it's another controversial cryptocurrency, and it's causing havoc in the digital asset market. And this time it's not a stable coin. Staked Ether, or ST small letters, ETH large letters, is a token that's supposed to be worth the same as Ether. But for the past few weeks, it's been trading at a widening discount to the second biggest cryptocurrency, fanning the flames of a liquidity crisis in the crypto market. On Friday, staked Ether fell as low as 0.92 ETH, implying an 8% discount to Ether. So here's everything you need to know about that. But it does have crypto investors worried. Each staked Ether token represents a unit of Ether that has been staked or deposited in what's called the beacon chain. Ethereum, the network underpinning the Ether, is in the process of upgrading to a new version that's meant to be faster and cheaper to use. And it's going to be called Ether 2, isn't it?
yeah, I thought they were doing Ether 2.0 or something
Yeah.
like that.
That's I think that's what it is, but the beacon chain is a testing environment for this upgrade. Staking is a practice where investors lock up their tokens for a period of time to contribute to the security of a crypto network. In return, they receive rewards in the form of interest-like yields, and the mechanism behind this is known as proof of stake. Excuse me. It's different from proof of work or mining, which requires lots of computing power and energy. To stake on Ethereum currently, users have to agree to lock away a minimum 32 ETH until after the network upgrades to a new standard known as Ethereum 2.0. However, a platform called Lido Finance lets users stake any amount of Ether and receive a derivative token called staked Ether, which can then be traded or lent on other platforms. So it's not a stable coin like Terra or Terra USD, like Tether or Terra USD, the algorithmic stable coin that collapsed under the strain of a bank run. It's more like an IOU, the idea being that staked Ether holders can redeem their tokens for an equivalent amount of Ether once the upgrade completes. So are you familiar with that? No, at all?
Not really, but if the staked versions have dropped below the price of what Ether is worth, then yeah, that's a bad that's a bad sign right there. That's a definite liquidity problem for them. How they're gonna fix that, I don't know. But if it were to drop any farther, they might have some serious issues, and then that might go bye bye.
Okay. What kind of strategy would you use? I mean, to recover from that, I guess.
It would be difficult because it's all about staking is all about liquidity. So if the price of your staked ether falls below what the price of one ether is worth on the open market, then the people that have staked them wouldn't have any incentive to stake them because they could just go take their money and go buy more ether, which would be worth more than staking.
Mm-hmm.
And you're supposed to also get like a APY or something like that percentage per year for staking, or in other words, getting kickbacks for providing liquidity. But if it's not worth it to do it, why would you do it?
Right.
So
Right.
I don't know how they're going to fix that, or what the long-term ramifications of such a thing would be. But I would not be staking my ether any longer, especially if they gave you the option to pull out.
Mm-hmm.
I could see a lot of people that can't pull out probably sitting there worrying big time, but everybody else that has the ability to, for whatever reason, I would expect them to pull out.
Okay. Okay. So the Ethereum 2.0 didn't really help anything, it sounds like.
Nah, if it didn't fix their liquidity problem, then no.
Yeah. So do you think it made the whole cryptocurrency market worse, or just Ethereum worse, or
Just
better, or what?
Ethereum. I don't see how it would affect anything else.
Okay.
The value of staking of a staked coin probably went down due to the market, but that would also be a bigger Ethereum problem than a market issue at whole.
So they've got something to fix then, it
Yeah,
sounds like. So
yeah.
it's not the market as a whole. Okay. Well, that makes pretty good sense. Now, audience, just a quick reminder here. You're listening to Cryptocurrency Odyssey. We air live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, and nationwide on Zeno FM with slash St. Louis. Or your city in there, Monday to Friday at 11 a.m. and 4 p.m. Now you can call us with questions, comments, answers, whatever you want to call us about at 314-781-7612, and that's my office line. So just leave me a message since today I'm here. And I will get right back to you. Or the 800 number is 877 212 1400 for more information. And we'd love to hear your comments. So call us at the station also. This station number here I'm unsure of, so I'm not going to give you that right now. But you can check in with us here also. So on with the show we must go here. My next question is crypto the reason that the stock market is falling?
I don't believe so. I believe it's a factor of things, and I think the stock market falling is the reason why the crypto is falling, because the crypto relies on the USD, and since inflation has increased so much recently, that can really put a strain on the value of a dollar.
Mm-hmm.
And so thus I think the crypto market relies more on USD than the stock market relies on crypto to increase or decrease in price. You know what
Okay.
I'm trying to say? So I think it's easy to blame it on crypto because they'll blame the stock market going down on anything but what's actually causing the stock market to go down.
Right.
So they blamed it on Russia. Now it's crypto.
Mm-hmm.
I mean, it can't be that inflation is surging, so people are scared. It can't be that.
Mm-hmm.
you know.
Right. Right. And I suppose the big money banks, they want to blame it on crypto because they're actually adapting to crypto, but some of them aren't. And I think they'd be happier if crypto wasn't around.
Yeah.
And another article that I was reading. From the gold fever of the 1840s and 1850s, and the bicycle bubbles of the 1890s to the bowling manias of the 1960s, and the dot-com boom of the 1990s and early 2000s, our animal spirits are forever in search of greener pastures, it seems like. So, in recent times, the financial herd has stampeded into the field of cryptocurrency. And early last year, 6% of U.S. respondents said that they had purchased or traded cryptocurrencies in the previous 12 months, according to the Statista Global Consumer Survey. Respondents in Peru, Turkey, the Philippines, and Vietnam had entered the crypto market at much higher rates, from 16% to 21%. So in Central America, and you've heard me say this before, El Salvador has made Bitcoin legal tender and plans to develop Bitcoin City at the base of the Conchagua volcano. I don't know if that's a good place to put a city, but as
I don't think
those
so.
those guys in where was that, Greece, where the volcano took
Pompeii.
everybody out. Pompeii, that's the one. Yeah. So the International Monetary Fund has warned El Salvador against this course, and digital currency has achieved remarkable legitimacy in the minds of the masses, the media, and the markets, but not everyone buys the technobabble, as Paul Krugman calls it. Cryptocurrencies play almost no role in normal economic activity, he writes, and investors like Charlie Munger have had have been rather evocative in their criticism. A key element of behavioral finance that we need to appreciate, however, is that perceived value is contagious. I don't may not believe in the aesthetic appeal of diamonds, for example, but I can't ignore the psychic value in the imagination of others. I mean, it's only worth what you think it's worth, right?
Right.
It's a rock. So, true, crypto ostensibly does have some economic value. The promise of blockchain technology, security, transparency, efficiency, traceability, and automation has been discussed at length. We've talked about that a lot here on the show too. And the thing about the crypto market is there's always lots to talk about, because there's just so much happening. And I have a feeling that part of the crypto problem is that things are just moving so fast, and some things get left behind and need to get caught up, and it's growing pains.
Yeah, they often, when they say that a bubble pops, it's just a reset. So, like, it's time for crypto to have another reset. I think the last one was, 2010, I think, or 2012, when it really, sorry, no, 2020 is, I think, the last time that Bitcoin, anyways, has fallen below, like, 30 or 40,000. And they called that a small reset. But, I could see with it losing over almost $1.5 trillion of value, that, that's could be considered a market crash for sure,
Okay. So a reset is just another word for market crash?
Sure, why not?
Okay.
I mean,
reset the market. Okay, I can go for that, I guess. Well, for this reason, the reset, crypto non-believers should be aware of what former Intel CEO Andy Grove called the trap of the first version. Yeah, Intel CEO saying that. Okay, so think, for instance, of Apple's handheld Newton devices in the early 1990s. There were legions of naysayers, and it became something of a boondoggle, but it was not the end of the digital handheld device. Sometimes it can take generations for technology to realize its early promise and transform the landscape. And I guess that means finding early adopters. Depending on how many early adopters you've got. The crypto faithful, on the other hand, must beware of the siren song of speculation. Irrational exuberance, natural Ponzi processes, and fear of missing out, or FOMO, can generate a lot of recklessness. Just as it may take generations for a truly transformative technology to achieve critical mass. Poor investments and outright scams can survive for decades before the bottom falls out. And an example that they use is Bernie Madoff, and
right.
He pulled a big one, a big scam, and I guess he died in jail for it. So, His family got pretty much destroyed by it too. So those are things that I guess we have to watch out for. And so maybe this is the time to talk about what are some good trading strategies for crypto trading in the current market.
Well, anytime there's a bear market, you want to kind of wait for an opportunity. A lot of people would have said when Bitcoin dropped below 19,000, or sorry, below 20,000, would have been a good buy-in price because now it's up 21,000. But doing technical analysis on like a Bitcoin chart is impossible because it's too volatile. It's the same thing with like trying to do analysis on any technical analysis on any sort of cryptocurrency because there's just too much volatility. You could say, oh well, I knew that it was going to rise up above 20,000 again. Well, yeah, obviously, because it's done it multiple times over the last 12 to 13 years. It's dropped down below 20 or below 40. It always rises back up. It's a good bet that it's going to rise back up. And if you're a betting type of person, that'd probably be a good place to start with a small investment of $100 or $1,000. If you invested $1,000 right now in Bitcoin, every time it jumps $1,000, you'd make like $10. And since its all-time high is somewhere around 69,000, you could say at 20 grand to 69,000, you could be making $10 every $1,000 it jumps. So if you were a betting person, you could make a couple easy $1,000. But why would you do that when you have something like Shiba Inu that's currently sitting at about 1/1000th of a penny, and you could buy a few million or a few billion of that because its all-time high is like 1/100th of a penny. So there's opportunity to be made there more so than opportunity to be made at with Bitcoin, and that's the type of things that people have to look at when they're deciding what to invest in, when to invest, et cetera, et cetera. But since this is considered a bear market, I would say hold on to your money, wait for the bottom to even out. And when that bottom evens out, nobody really knows, but you have to be ready because Bitcoin will change, or I should say the price of Bitcoin will change so rapidly that you might only have an hour to get your money into position before it shoots up again. And knowing when that's going to be is probably going to be based off of how the economy itself looks. So when all the economists start saying the economy is turning, that might be a good time to invest. Whenever you start reading a lot of articles from reputable news sources saying the economy's turning, or when you go to Reddit and you look at what people are saying, and if they say the economy is turning, but this is also called sentiment trading, and it can be extremely volatile, and you can lose a lot of money. And that's pretty much how I do it. Is I do it based off of what people are saying, what they feel is going to happen, because my technical analysis isn't that great, but I can at least spot a trend a little bit, And if it starts trending upward, that might be the point to buy in, but you got to know when to also get out.
Right.
So if you were to buy Bitcoin at 19,000 and then you turn around and you sell at 21,000, and you've made, depending on how much money you bought, if you bought a full coin or you only bought a fraction of a coin, you've made maybe $100, maybe a couple thousand. So that's just one thing to be looking at when you are trading.
So you're finding that technical analysis on cryptos is like hard to do, basically, even with a chart.
Near impossible is what I would say. People that have been trading for years or decades might be able to have a better guess than most people, but you'd want to gauge what the economy is looking like, especially with the USD. When inflation starts to go down, if it does start to go down, that's probably a great time to buy into crypto, because as the dollar gets stronger, crypto will get stronger, especially the stable coins.
Well, that was the pattern before this crypto crash, I guess, and so we're waiting for the interest rates to go down.
Yeah,
Basically.
I'd say for things to start to level out, like with interest rates surging, inflation surging, and the government not really knowing what to do, I'd say it's a bad time to invest right now, because you could lose a lot of money. But once it looks like everything's starting to even out, that'll be the second that you'll want to start investing.
When you got any ideas of when it might even out?
No, no, none right now. I mean, it's still, everything's still up in the air. I mean, it's hard to tell when I look at some stocks. Like I look at stocks almost daily, and some of my stocks have been going, like some stuff that I sold before, luckily I sold before the stock market really tanked, is now they were worth like $3 a share. Then I sold the shares, and now they're worth 45 cents. And I'm like, well, good thing I got out when I did. But at the same time, you want to, those types of stocks you'll want to keep an eye on too, because once the market starts to even out and things start to go up again, you'll want to buy in, because there's a good chance that those same stocks will go back up to where they were or close to, thus making you money.
Well, it looks like with the Bitcoin ETF being approved, that seemed to put a positive slant on the market, because things are going to start going up. So I don't know how long they'll expect that to happen. I guess we should keep an eye on it and see what.
Yeah, it'd probably be a good strategy to watch it for a little while and see what it does.
Yeah. And that should make some people some money. Okay, so here we go. We're coming into break time. We have some ads we want you to listen to, and if you like what you hear, go ahead and buy something, and we'll be back in about 5 minutes to talk about cryptocurrency.
Commercial Energy Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. Bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants, at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let Promo Experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information, and don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit publishingconceptsllc.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
Hi, listeners. Welcome back. You're listening to Cryptocurrency Odyssey here on 92.9 FM. And before the break, we were talking about how the price of Bitcoin is up today. And doing some research here is I have a story about why the U.S. stock market is tumbling in 2022. So this is from Reuters News, and out of New York. The U.S. stock market is off to a brutal start in 2022. The S&P 500, which is widely considered to be the main benchmark for U.S. stock market performance, declined 13.3% through April, the steepest 4-month drop to start any year since 1939. The index continues to fall in May and was down 16% year-to-date as of Tuesday's close, approaching the 20% threshold that some investors consider confirmation of a bear market. Now, what is weighing down the stocks this year? The S&P started the year having more than doubled from the lows it hit in March 2020, an upswing that went into reverse almost immediately as the calendar flipped to 2022. The main factor cited by investors and analysts for the market's weakness is the policy change at the Federal Reserve. As the pandemic took hold, the U.S. Central Bank put in place emergency policies to stabilize the economy that investors say also emboldened buying of stocks and other riskier assets. But the Fed early in 2022 signaled that it was pivoting to tighter monetary policy in order to tamp down surging inflation, a significant change to the investing environment. And the Fed in March raised interest rates for the first time since 2018, boosting by 25 basis points. Earlier this month, the central bank raised rates another 50 basis points, the biggest move in 22 years, and Jerome Powell signaled similar increases could follow. So that's the current story about why they're going up. Do you have an opinion on that?
Not really. I mean, it seems about right, but like I don't know.
Okay.
I'm like it sounds like it's a load of BS, but we'll see. We'll see what happens.
Well, the market's going up today. So,
Yeah, that doesn't mean it's going to go up tomorrow.
yeah, correct, correct. So, it sounds like maybe the sentiment in the market is not what it should be. So, I mean, how can we tell when the sentiment in the market has changed for the better? Okay, well, I guess for the worse too.
Yeah, I mean, pending legislation, any new regulations the government might be coming out with, any talk of regulation, news articles that you read, just about anything that's related to the economy that you can uh, listen about, read about, or anything like that, is how you'd gauge sentiment in the economy as well as what the stock market may or may not do. I think the biggest movers of the stock market as well as crypto would be anything to do with inflation, especially right now. Any talk about that, any
Okay.
talk about the increase in the what do they call it? The Fed rates, or,
Okay.
the yearly rates, whatnot, all that jazz. So any talk about that's going to move the market in one way or another, depending on what they say, is what's going to happen.
You're
So
right. Right. What I don't know if you heard that the inflation rate has slowed down now, or has it increased since they made all these
well, I mean, just what
new interest rate?
a few days ago they'd said that the inflation had risen higher than they expected. I think it was like 8.4%, which is higher than it has risen at one time in 40 years. So
And so did has the actual interest rate increases shown
no,
any
I think
result yet? Is it still too early?
think it just made it worse because they increased interest rates by like what 3 points or 0.75% or something like that,
Right.
and it didn't do much to the market, or to help the market, I should say, because it says, I mean, even though the market's up right now, there's 5,200 advancers on the Nasdaq versus 1,500 declining stocks right now, but the Nasdaq is still down 151 million dollars for the day. So,
That's quite a bit
yeah, I
for
mean,
a daily.
I think over the last month it's been down 4.1 billion or something like that. So, that's a lot of money.
So it's not the new interest rates don't seem to have taken any real effect yet.
Not yet, but I don't think it's gonna help much. So we'll
How
see.
long? I don't know. I don't know how long it usually takes an increase like that to have any effect. Do you have any idea?
I don't know. No.
Okay, okay, because I think that's probably one of the things that we need to watch, I guess. So, listeners, if you're just now joining us, you are listening to the Cryptocurrency Odyssey show, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, and nationwide on Zeno.fm with St. Louis/St. Louis Monday to Friday at 11 a.m. and 4 p.m. For more information, again, you can call me at 314-781-7612, and that number again is 314-781-7612, or you can try the 800 number at 877-212-1400. And if your phone service is down, you can try us online at our website, which is ccodweb.us. So give one of those a try and give us a comment or some ideas even. Anyway, we are always looking for a way to figure out the market, I guess. So, what are other ways of gauging the market besides, like I know you can watch news reports and you're probably being hammered by them actually, but what other ways are there of gauging the market?
Just sentiment of people is a interesting way of doing it. Although I wouldn't take it as a actual way of gauging the market because, well, people are fallible. So I take what most people say, like random people on the internet. Just take what they say with a grain of salt. But you should still factor it in a little bit, especially if they give you a breakdown of what's may or may not happen. I mean, it can't hurt to take that into account along with accounts of news reports, what's happening in the world. I mean, stuff like that. I mean, that's pretty much it right there. I think we've covered that 3 times now. So
Yeah, yeah. That seems to be a recurring theme here, gauging the market, and but it's important, and
yeah.
the good ways of doing it, I guess. So anyway, one thing here that I found was day traders, 10-day trading strategies for beginners. So this might be something that you could use, the listeners could use, we could all use, I guess. So just to get started here, day trading is the act of buying and selling a financial instrument within the same day or even multiple times over the course of a day. Taking advantage of small price moves can be a lucrative game if it's played correctly. Yet it can be dangerous for beginners and anyone else who doesn't adhere to a well thought out strategy. And I've always tried to use stick with my strategy, because that's what the big guys say. Pick a strategy, learn it, and stick with it, because that way you'll make more money.
There's a lot of things that people need to know about that type of stuff too. Day trading and stuff. Like if you do a margined account, then you have to have so much money in there at all times, and you can get what's called margin called if you trade on, because you're pretty much trading on credit when you do a margin account, versus like a cash account where you have to have the money in your account already, and you can't get margin called with a cash account because, well, you're using straight cash. But the problem with that, with both day trading on a margin account and day trading on a cash account, is that with a margin account you can only do so many day trades if your account value is below $25,000.
Okay.
So, and that's like 3 to 5 or something like that. It depends on who you're trading through and how often you trade. But so they'll, like, every single day they'll only let you do so many trades, and the SEC says that's to protect the little guys, and I'm like, no, it's not. It's to make it harder for them to trade on margin because you're a little guy. But with cash accounts, you don't have a minimum amount of trading that you can do daily. So as long as you have cash in your account, you can trade as many times as you want, which is how I would suggest people do it. Because then you don't have to worry about how many trades per day you have. You don't have to worry about the $25,000 minimum in your account because you're not using margin. There's a whole lot of stuff you don't have to worry about. But once you use up all that money in your account for the day and you've traded it, you have to wait at least a couple of days before you can trade again, because that money is now tied up. Even if you've bought and sold already, it's still tied up as unsettled funds. So then you can trade technically on credit without actually having a margin account, but you'll get something that's called a good faith violation or a GFV, if you sell that stock before the money has settled in your account. So like, let's say you took $1,000 and you put $200, or let's say $250 into one stock, then you put $250 into another stock and you do that 2 more times, 250 to 2 other different random stocks, now all your money's tied up. All right. So all 4 of those stocks increase, and by let's say a couple pennies, you make a couple hundred, you make, let's say, $10 off each stock. Now, when you sell all that, let's say you sold all 4 of those and you get that $1,000 back plus a little extra. Well, that money has technically not settled in your account yet because you've just traded it and then got it back. But you can still do at least to one trade, or you can do as many trades as you want with that original $1,000, but now you can't sell it immediately. If it goes up, you got to wait a day or two for for those funds to settle back into your account. It's very weird, and I know it's confusing.
A little bit.
You have to make sure that once you do that initial trade, that you have more money in your account so you can continue doing it over and over again. So $1,000 in that scenario wouldn't cover you for the entire day of trading. That would mean that after the first 8 trades, after the first 12 trades, because you've bought, sold, bought back, and sold, and bought again, that'd be 12 total trades. After those 12 trades, you're done for the day if you hit your max.
Okay.
Otherwise, you'll get a good faith violation, which then they will restrict your account, and it'll be like you might as well have a margin account at that point.
Okay. So you've got to watch. I guess it's all based on how much money.
Even with a
how
cash
much money
account,
you
you still
have.
got to watch how much money you're using and all that, because after those original 12 trades, you now have to sit there and wait a day or two. Excuse me, and hope that all of your trades go up instead of losing you money.
Mm-hmm. Right. But if you have some extra cash, you can make a trade with that, though.
Yeah,
right?
you could always put more in there. Like, for instance, Webull, who I use for trading, if you're going to trade crypto, you don't have to worry about any of that. You can trade crypto all day, all night if you want, because the money goes directly into your account immediately. So you don't have any settling of funds or anything like that. But if you're trading stocks and other securities on the stock market, you got to worry about all that stuff. And it can take weeks, months, or years to learn all that stuff too. It just depends on how often you trade and what you're trading.
Right. And how many different books you've read.
Yeah, how much information you've looked up.
Yeah, right. So it says here that not all brokers are suited for the high volume of trades day trading generates. And on the other hand, some fit perfectly with day traders. Check out the list here for those that accommodate individuals who would like to day trade. Well, I'm not going to show you the list because it's too long, but and we don't have time. The online brokers on the list have professional or advanced versions of their platforms that feature real-time streaming quotes, advanced charting tools, and the ability to enter and modify complex orders in quick succession. So that's what you were talking about, pretty much.
Yeah, a little bit, yeah.
Okay, so here's some day trading strategies for beginners, and then we'll consider when to buy and sell and that kind of thing. Key takeaways: day trading is only profitable in the long run when traders take it seriously and do their research. I guess that means you have to research your trading sources, I guess, too, and the actual trade itself.
You want to look at things like, what's that company doing? There's things called 8Ks, 3Ks, 10Ks that you got to look at, which are the filings that they file with the SEC if you're trading in the American market. All right, so you got to look at those, because that'll tell you who in the company that's buying the shares of the company. They'll tell you if they're selling. They'll tell you any future if they're trying to buy another company or something like that, if they're taking out loans, et cetera, et cetera. So pretty much you want to get all up in that company's business if you want to trade their stock. And you want to know what their debt to income ratio is, because that's a big factor and indicator of if they're going to be profitable or not, or how long they are going to be profitable for. I'm big into Sundial Growers, just to name one, which is a cannabis company located in Canada, but they're traded on the NASDAQ as well. And their stock is real cheap right now because of the stock market falling. So just like everything else, everybody's stock is falling. So they're super cheap right now, and they continue to buy companies. And they've already bought one company, and they have a stake in another company, and they're about to buy another company again because they have all this money, but they're a non-profitable company. And that might turn some people off, but for me, it's all about long run.
Right.
They're going to be profitable, and they might not be profitable today, tomorrow, or next month, but in 2 years, there's some definite possibility that they're going to be very profitable.
Mm-hmm.
And that's something that everybody should be looking at when they go to look at their these companies. You want to get all up in that company's business. You want to Google search them. You want to find out what their CEO's doing, what everything. You don't want to leave a stone unturned, because that's your money.
Mm-hmm. Right. So they're a non-profit buying up profit companies.
They're not profitable, not non-profit.
Not profitable
right now.
Well, yeah, there's a ton of those out there.
Yeah, there's tons of them.
Yeah.
But, once they do become profitable, obviously that's going to affect the price of their shares, and I've gone long on them, so
Yeah. Are they buying other cannabis companies, or are they buying
they loan out to other cannabis companies, they buy cannabis companies and producers of cannabis, as well as they own several different what do you want to call it, different types of, they own a great value type of cannabis company. They own a cannabis company that has a higher end cannabis, and they've just recently gone into liquor too.
Okay.
So not only are they selling cannabis, but they're selling liquor now too. And I'm like,
they're diversifying.
Sounds like a winning strategy to me.
Yeah. Yeah. I mean, that's those are two big parts of the economy.
Yeah. Especially
liquor,
in Canada, apparently.
Alcohol production. Yeah. Well, look at the size of some of our brewing companies in this country.
It's Schlafly.
Somebody's
like
buying that stuff. So anyway, one other thing is day traders must be diligent, focused, objective, and unemotional in their work. So I don't know any that are unemotional. The ones that I know tend to get excited about things.
Well, see,
and they're
that's
reasonably.
That's the FOMO there. FOMO is you being emotional about it. You missed out. Now you're like, darn it. I should have done this. I should have done that. No, you can't do that. You got to be like, if you miss an opportunity, well, you can kick yourself in the butt for the rest of your life. But, just get over it and learn.
Right. Because there's going to be more opportunities coming down.
There's always more opportunities coming down the pipe, especially in this market.
All the time. Yeah. With 19,000 coins out there now in cryptocurrency.
Right.
There's got to be tons of opportunity in there, even though they're all down. Now, right here, you said that you use Webull. Well, they're recommended here in this article. Interactive Brokers and Webull are two recommended online brokers for day traders. So, are you doing a lot of day trading?
No, not right now. I'm just kind of letting things hold on because my portfolio is not looking too good right now.
Okay. Is anybody's?
I don't know.
Okay. One other thing here, day traders often look at liquidity, volatility, and volume when deciding what stocks or cryptocurrencies to buy. And those are real important items. I mean, is the company got any liquidity? Well, you don't want to end up like the current situation type of thing, because a lot of it is liquidity, and they ran out of liquidity at the last minute and weren't able to produce it.
Right.
And some guys have gone out of business because of it. And let's see here, we're coming to the end of our show here, and I wanted to talk about the tip of the day today. The tip of the day today is diversify your crypto portfolio. It doesn't pay to have too much invested in one single cryptocurrency. As they say, don't put all your eggs in one basket. And as with stocks and shares, spread your money out among different digital currencies. This means you don't risk being overexposed should one of them plummet in value, especially as the market prices of these investments are highly volatile. There are thousands to choose from, so do your research. Examples include WorldCoin and SafeMoon are a couple, and it looks like we are coming to the end of our show, and I want to thank you for listening. I would like you to come back next week and listen to us, and the big rule today is don't take any wooden crypto.
All right.